Feeling broke yet? You should. I don't know. There's a lot going on right now. Inflation, gas prices, war. I don't know. Housing market is crazy. It's a lot of stuff going on right now. So, we should just let's talk about a few things. Give it a moment. Hold on. All right, welcome back to another episode of OPM and Beyond, where we discuss, you guessed it, other people's money in order to learn more about ourselves and create generational wealth. I am your host, E. Rains. Let's get right on into it. So, there is a lot happening. People are going back and forth saying, are we in a bear market? What's happening? What are we entering into? I am of the opinion that yes, we are entering into a bear market. Different people say different things, whatever. But just for me, I'm thinking it's going to a bear market. And just by the way, before I get started, I am not a fiduciary to you. So what that means is you do your own research, make sure that you're looking into your own investments and making your own decisions based upon your due diligence. Nothing that I'm doing. I am what would I refer to myself as? Social or a media content creator, something of that nature, right? I am not a fiduciary to you. If you don't know what that means, please look it up. It's somebody who has a responsibility to you, who's your financial advisor, that makes sure that they are acting in your best interest. So I am just giving my own commentary. I do not fall in that category. So make sure you do your own due diligence and research. Let's move right along. So are we in a bear market? So before we get too deep into things, let's just kind of start off with a basic understanding. Bear market, what are we talking about? Different people have different definitions, but let's just start with a common ground here from NPR. Let's see here. So, all right, a bear market is considered an important barometer of investor pessimism and is symbolic of a deep and sustained market sell-off. It is defined as a period in which either a stock or market index drops by 20% or more from a recent high point. So, you're looking at a drop off of about 20%, right? So, okay, so let's just take a look here. S&P 500, looking at from May 10th to May 20th. When you all see this, it'll probably be like May 23rd, 24th, something like that, right? But yes, from May 10th to May 20th. So you'll see here that drop, right? That shows you, you'll see the line indicating bear market threshold. See how we kind of played with that? We dipped down beneath it and then bounced back up there. So that's kind of us showing that we've touched it. We've dipped our toe to what will be considered bear market territory for at least the S&P 500. That is definitely within our grasp lately. So, and a lot of people would believe that we're going to go deeper into that because of several different things, right? Inflation, as I mentioned before, is kind of out of control. So I believe at one point over 8%, well over 8%, and basically in order to get that down, the Fed is going to be raising interest rates, right, at the incrementally. And what that does is that forces more downward pressure, right? So that may impact the stock market as well, where people may be pulling out funds and trying to either invest in things that are more certain bets or who are using the funds that they extract for other things that they may need in the interim with the down market. There is higher gas prices that are being affected by a lot of different things, including war with there's the Ukraine and Russia situation. A lot of different things that are impacting gas prices right now. The housing market is absolutely bonkers. I won't necessarily get too much into that in this particular video, but it is nuts. And do you know people are still out here talking about, yeah, I'm gonna buy a house. What? You know what? When we say housing market, it's a little bit confusing because the housing market is a bunch of smaller markets that are more local and have different issues that impact them locally, right? So we refer to it largely as a housing market, but in some random spaces and places, it may make sense at some point to buy a home, but by and large, homes are overinflated in value, and interest rates are a lot higher now than they were a year ago. And when it comes to the how much you'll be paying for the loan to get that home, because majority of people are going to be using loans to purchase their homes, right? So there's and a lot of people are moving towards taking ARMs, those are just adjusted rate mortgages and what have you. That is completely crazy as well. So just a side note, that's another aspect that is all over the place when it comes to what is pulling on the consumer's income constantly, right? And so there's a lot happening. There's a lot happening at the same time. That's important to note. It's a lot happening at the exact same time that make me believe that we're just going to be sliding off into this bear market for a while. Just slide right off the cliff there. But again, different people differ about that opinion, right? Some other things that are going on that kind of give people cause to pause. We'll look at this article where it says big retailers like Walmart and Target have recorded their steepest stock drops in decades this week after earnings that signaled an end to the pandemic spending boom. So a lot of people are, not spending as much money as beforehand. When people were stuck in the house, they came out, they were spending all this money, ordering things online, all this kind of stuff. There was a boom. And now that boom has kind of come to an end, and you have a lot of retailers that have overinflated supply chains. If you have a supply chain background, you'll note that is probably the bullwhip effect, right? Where, because there's something going on, people start pushing further up the supply chain for either more or less product, right? And so now you got all this product coming in and the demand is kind of drying up because people just do not have the disposable income to be making all these purchases, right? So that's of a concern. And then a lot of things that people would do to kind of put their money or park their money someplace else for safe havens is not necessarily available. Like a lot of people would, switch over to the bond market, and bond market looks crazy, and crypto is going through something. It's going through something heavy. But crypto has always been that way. Wild west, up and down, all over the place, right? So for crypto, you really have to have a certain type of stomach for investment, right? And kind of be okay with the ebb and flow there, right? But that's kind of what's happening there. Like, just read this quote here. To investors, it can feel there is no safe place. While the vast majority of individual investors are holding steady, that is in part because customary alternatives don't offer much relief. Bonds, normally a haven when stocks are falling, have also been pummeled. The cryptocurrency market, pitched as a counterweight to traditional stocks, is sinking. Sinking is putting it nicely. As we move along. But anyway, hey, listen, why is all that important in the first place, right? I just wanted to bring this to you all's attention as my viewers, because I think it's important that you just be mindful of what's happening with your investments. Be mindful of, what your strategy is moving forward. I'm not really sure, for each individual person, they're making individual decisions, but I did want to make sure that you all are aware that things are happening, that you may want to reassess whatever plan you have in place. Make sure that it's the accurate or the best plan for you in place, because all of these are going to be, your formula for success, your investment strategy, your long-term and short-term plays. All of those things are going to be very you-specific. You-specific meaning it is tailored toward your background, what you're looking to get out of the market, how much money you have to play with right now, what kind of family structure do you have, when are you going into the market, when are you getting out of the market, what type of investments you want to hold, what do you want to sell, like just all these different things, right, are very specific to who you are and what you look to gain in the short and long term, right? And so be very aware that there's a lot that's going into play economically around the world that are interconnected. So just be mindful. You have different nations that are dealing with COVID differently. So, some like Shanghai is still doing, shutdowns, trying to get COVID under control, which has significant impacts on supply chains, for different products and things that have been ordered for general consumption and consumer goods. So that's impacting things along with the slew of other things that I've mentioned, right? So all of that is happening at the same time. So just be sure that you are keeping your eyes open, making the proper adjustments, whatever you deem to be appropriate for you, and just being mindful so that you're in the best position to make decisions before they're making themselves, right? So be mindful of that. So a few things that you can do. Again, it's a very individual decision and thought process that you have to go through to find out what's good for you. But a couple of things you can do is ask yourself certain things like, for one, have you been gambling or investing? Because it's kind of important, right? So what's the difference? So in my opinion, if you're gambling, you're more so just kind of, not doing any research. You're kind of just going into things blind, just, hey, let's see what happens. You have no idea the level of risk that you are or are not taking on. And it's just more so something without really a thought process and strategy behind it, right? Investing has much more strategy, much more due diligence and research that you've done to make sure that you understand the risk that you're taking on, you understand the benefit you can get out of it, you understand how you want to utilize the investment for your short and long-term goals, right? So it's much more woke. It's much more attentive, right? In terms of how much information you have about what you're putting your money into, right? So just ask yourself that, and then make sure that if you feel like you're more on the gambling side, do more research. Make sure you're understanding what it is you're actually putting your money into, whether or not that's the proper place for it, and what have you. Just think on it, right? If you have been investing and actively understand what it is you're giving your capital to, then you probably are in much better position to make the decisions and pull any audibles that you would need to pull if you need to change anything, right? So just be mindful of that. Also, another question that you may want to ask yourself is, have you invested money that you need in the short term? Have you overinvested? Because it's really important to make sure that you're putting yourself in a position to win. That's the whole point, right? So if you have invested money that really you should be using for something else in the short term, like now, like, critical home repairs that are of a safety nature that you really need to get done, things that are related to you needing to pay for healthcare, or, things related to your children, things like that, where you really need those funds right now, as opposed to, whenever the market may rebound or what have you. You really need to make sure that you are assessing that properly, because let's say you are down 30 or 40% on your initial investment. It still may make sense to take that money out if you need it today, to avoid going into deeper debt with high interest rates, in a deleterious position for where you are today, right? So you have to make that decision. You also have to decide, or understand how long you're planning on being in the market. Your strategy may be significantly different when it comes to the amount of risk that you want to take on. If you are in the market for another 30 years, another 10 years, another 5 years, or just another year, 6 months, whatever, like those different things will greatly impact your strategy as to what you want to invest your money in, how long you want to leave it there, and what your strategy will be in terms of your mix of different things that you're investing in, right? So yeah, just be mindful of those different things. Be mindful of who you are and what's important to you. What's important to you as somebody in your early 30s or late 20s is very significantly different than somebody who is in their 60s or 70s who's on a fixed income and retired. Those are very different considerations about what you want from the market, what you expect to gain, and when you expect to gain it, right? So just be mindful, be active in terms of controlling your investments right now, because there's a lot of uncertainty in the market right now, and so you just want to make sure that you are aware of what's going on, you're actively tuned in, and you're in a position to win. All right, so guys, I just wanted to bring that to your attention. I appreciate you for joining us for another episode of OPM and Beyond. Until next time, I'm out.
I can never doubt myself, I know better. All of you critics be acting like you know better. Blowing the smoke, but I know when the dust settles that I'm in my element. It's evident that there's levels to the game. All of those dark nights I got then, breaking my back to make it out, got me feeling like rain. I ain't never need your help, I know you wishing me well. A penny for your thoughts, but seeing no change. I snap for the sun like Diddy. The richest got a mad ass son, I'm like Billy. I ain't never switch up, whole team with me. Putting on for my city like OAGZ.